Hello, trading family. Welcome back. Today, I want to share with you the ideal of I wish I would have known. Okay, there's a lot of things in the market that at the time may not make sense, and then over a course of 2 years, 3 years, it starts to make sense. That comprehension is starting to catch up with the skill as well as your understanding. So, let's talk about it. So, what I've learned recently is that when you want those right now entries, you gotta look left. Sometimes you'll get a setup in a demand zone and you're still waiting for your change in direction confirmation. And by the time that happens, 60 pips, 40 pips would have went by and then you're now just entering the market. So let's talk about GCAD, the one I took this morning, okay? Now, if you are looking at the setup, you're opening up your chart and you're looking at the setup right now, and you're like, oh, here we go. We got a demand zone. Okay. This is the last selling counter that pushed the market up that broke structure right here. Can we all agree with that? Yes. This is your demand zone. And then typically they teach you, well, once you get in your area of interest, you want to drop down to the lower time frame and you want to confirm. You want to see your change in direction, change in character, which will look something like this. Okay, market go up, down, break. You're looking for this pattern. By that time, the market from this entry point to that and then back to your entry, it would have give you about 90 pips, 60 pips. Even if you were to take it right here, it would have went up here and then came back. So we're missing out on about 50, 60 pips. What I've learned though is, say we saw this setup days ago based on this red box. We drew our zone. We know that in this zone we would typically buy. Okay, we will buy the right shoulder immediately when the market gets here. However, we do know that news is coming out too. So we're gonna wait a little bit, right? What I've learned that when you have a big when there's news, you definitely want to stand by, but also when you have a big entry to stop loss gap like below the low like 60 pips, it's best to take your fib levels from the swing low to swing high when you're looking to buy. And if you're looking to sell, you'll draw your fibs from your swing high to swing low in the opposite direction like that. So typically when I have an area, a setup that I'm looking to trade on and the stop loss is more than 30 pips, I'll use my fibs and look for my 702 area on the fibs and see and measure if this is within the 30 pips from the swing low that I'm willing to risk. Okay. If it's not, so this is about 31. If it's not, I'll go down to the lower time frame and I'll go back to that area and look for imbalances to see where the market could go to retest before it takes off. Here we have an imbalance on the 5 minute. What I've also learned is that this 5 minute rarely retests. It rarely comes back to that area, but it does. It happens. If it don't come, if you can't find anything between the 5 and 15, so here's one on the 15 right here. This was already retested with this wick right here, so it really doesn't count. But if you can't find anything between these two time frames, you can always look to take entry between your 886 fill level and your 786 fill level. Okay, and so as you can see with this market here on GBP CAD, that's exactly what happened today. It came into this 886 area and it reacted and bought up to the zone. Okay, that's what I wish I would have known when I started trading. Now let's go to what I wish I would have known. Number two, when news come out and you have a large candle like this one, so this was news, and I'm going to show you that on my forex, my FX books, that this was news. We had CAD news this morning around 7:30. Okay, it was high impact news, which caused the pair that I was trading to react in this manner like this. It dropped over, I want to say 60 pips. Okay, 60, 70 pips. When you have news, just know that the market will give about back 75 to 100% of this impulse candle within the same day. I repeat, when you have news, the market will give back about 75% to 100% of this candle of that news, that big drop. by the end of the day. Right now, we can test this theory with a bunch of different things. Okay, so right now you have your 0, 25, 50, 75, 100 area. You can use your fibs or you can use your Gann box to label your quarters on the chart so you can line it up with the candle. I'm going to get rid of this fib so you can see a little bit better. Now, I'm going to turn back on my fractals because there's other confirmations that align with this theory. And as you can see, the 75% of this candle is here. So I'm going to go ahead and mark this area. This area aligns with another strategy, which is the signal high, signal candle strategy. This is the swing high of this move right here. I know this is higher, this wick is higher than this one, but by dropping a horizontal line, I look left. This is my signal candle right here. So I look for the market to retest anywhere in this zone and of that candle. The candle opens up right here, which also aligns with 75% of that candle. Second confirmation, right? My third confirmation is there's a big gap that needs to be filled, okay, in this particular zone. So I know that this gap, this imbalance will be filled, which it was, okay? On the 5-minute time frame, there is a blue box that could possibly be retested. We know that when you see blue boxes, you should be looking to sell, take a sell at this entry point here. And even then, on the 5-minute, there's an imbalance between this buying candle and this selling candle. And 50% of this big gap is the 75% of that entire candle. So that is why I would look to take profit at this area right here. You build a case, okay? That's what trading is about, building a case and a reason for buying and selling. So once again, I talked about the right now entry in the market versus the waiting for the confirmation at current market, and how if you look left, you can look for those setups to get in the market at where the market currently is. And I also talked about the using the fibs so that if your entry is too far from the swing low, you can look to take entry around the 886, 702 of the fib level from that impulse leg. I've also talked to you about when news come back out and gives a big candle that the market will give back 75% to 100%. This only happens with news. If it's just something just happening in the economy and whatever, and news is not coming out, then that rule does not apply. The last thing I want to share with you is what happens on a lower time frame, what happened on a higher time frame. So what I mean by that is, let's go ahead and clear my chart. And we're going to go back in time to anywhere right here. And we're going to go to a lower time frame. Let's start on a 1 minute. And I'm going to just use the red box, blue box strategy. So I'm going to go ahead and remove the fractals, kind of clean up the chart a little bit so it's not distracting. And what I'm going to show you is how you can capitalize on setups on each time frame. So right now, current market, this move already played out. We got a violation retest on this red box. So let me show you what that looks like. Sometimes you'll get a violation. It happens. This is all you got to do is react, get in the market, and trade the right way. So right here was a last buying candle that pushed this market down right here. Market had broke above that last buying candle. Actually, it did give you an entry. So once it gives you that 100%, you're going to go ahead and extend this red box. And you're going to wait for the market to come back into the zone for the buy. It did do what it was supposed to do, even though it didn't push up a lot. It only gave you like 3 pips. We are on the 1 minute time frame. So once this market closed below the head of this inverted head and shoulder, you could use the same zone and look to take the sell in the opposite direction. And in this case, this market did what it was supposed to do, and it gave you 4 pips on the 1 minute time frame. And it came back up. So now 1 minute time frame, we're done. Let's go to the 5 minute. Do we see a setup here? Not quite. Okay, so the 5 minute setup is not ready. Well, what about the 15 minute? The 15-minute setup was available if we were to replay this and before it had gotten to that point where we were. So this would be the 15-minute setup right here that you could have taken for the buy. Last buying candle pushed the market down, gave you over 110%. Came back into this area right here. If this impulse is more than what you're willing to risk, draw your fill to swing low to swing high. That wick is definitely manipulation though. But it did align with the 702 entry from here at this initial point. At this point, you need to be taking the trade. 34 pips on this move. That's amazing. Okay. So 5-minute plays out and then you start moving up. Okay, do we have a 1 hour setup? We don't just yet. Okay. Now we do have one right here for the violation of the inverted head and shoulder based off of this box right here, this last buying candle that pushed the market down. And so the way that looks like is you have your last buying candle push down 100%. We finally get the close below right here. So we extend the box. Okay. And close below here, extend the box, wait for the market to go back into the zone. There is a little bit of drawdown for here. From this point to here is 40 pips. This impulse move will be the reason why I will pull my fibs out. Draw from swing high to swing low of that move. And look to take entry at the 702 area. This only came to the 50%, 618. So it actually came into this red box instead of the one to the left for this one right here, but it did come for this one. So this one, this entry point on right to the right respected this red box, and then the entry point for right here respected this red box when it closed below, which at the time you should have been looking at this one because the market does move in levels, close below here. So we get the entry back at this green box. The market drops down lower, activates this area right here, and then it comes back up. So boom, 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 comes back up right here. And that's where you get the drop down. Did I say that right? I'm sorry. I think I'm getting lost in the sauce. So market goes up, down, boom. So it'll be this one, comes down lower, activates this box, boom. Okay, just make sure I had it right. So, and then it's just after that, you just move up. You just move up the time frame, look for the setup. We have one up here, but the market's way down here, so I'm not looking way up here unless there's news that's pushing it up that fast. Let's see. And that's how you pretty much can capitalize on taking setups on all the different time frames. In the case that you have a time frame where the 4 hour, the 2 hour, the daily, the 1 hour, they all line up, that is a very good setup. Hands down. That one is a very good setup. I had that happen to me on Euro NZD a couple of days ago where I had the 2, 3, 4 time frame, 4 hour time frame line up. They all had this, they were all showing the same setup. Okay, at that point, you're gonna go with your 2 hours. So you see, the 2 hour had the blue box, the 3 hour had the blue box before this even happened, and the 4 hour had the blue box. This is a very good setup for the sell. You take that with confidence. Okay, now the daily didn't have it, but I had three other time frames confirm that was a good area. Plus the signal candle on the daily confirmed that that strategy confirmed that it was a good area for the sale. So I hope I was able to provide some value to you today, clear up some confusion, or just kind of help with your understanding of the market and how it works. I pray that everyone have a profitable, prosperous trading week. And until next time, happy trading.